welcome back to another week of Nexus Green Market Updates. It is Tuesday morning, March 18th, 8:55 a.m. Let's get to the markets. As things stand right now, Nexus Elevators paying a range of $4.34 to $4.41 across our terminals. Somewhat of a range there based on different market access that's available for the old crop corn. New crop corn bid right now across the company is $4.16. As that stands right now, we're down about 10 cents from a week ago today. For old crop corn, about steady for new crop corn. Soybean market right now across the Nexus terminals, significantly tighter market, 950 to 953 today for soybeans. That is actually up about 4 pennies from a week ago. New crop soybeans right now are trading at 950 to 955. That number is up about 10 cents from a week ago. I'm going to talk about something today that doesn't get touched on enough among the analyst crowd, and myself, I don't talk about it quite enough, but the technical analysis of the market. The S&Ds are the easy thing to speak about online across the various forms of media that we have available. I do want to touch on the charts a little bit. We have really two markets occurring right now, old crop and new crop. Old crop corn is following the May 25 Merck soybean contract. New crop corn is following the DEES 25. When I really look at a picture of that, and I'm going to show you an image of that at the end of this session, the May 25 probably is, without a doubt, a chart of greater scale. I will take this all the way back to August. I will tell you that the lows were established around the 26th of August of last summer. 414 and a quarter is where the lows were set in. We saw this thing rally over $1. Took us to February 19th. Topped out at about 518 and three quarters. Did that dramatic pullback we talked about a couple of weeks ago. Lost 76 cents in about 3 weeks. And bottomed out at 442 and a half on the 4th of March. Right now, as things stand, we've recovered about 20 cents of that. We're trading around 442, something like that. We'll see how today's session really ends up. So really, as things stand in the market right now, you have two things. You have the Safrinha corn crop in South America, and you have the U.S. corn crop right now. Most of you have already heard me establish that the market is really trying to influence all of our growers nationally to add about 5 million acres of production. That's going to take some price to get that done. I believe that we are set up right now. The charts don't look too bad, and we are set up right now to test maybe a $5 test right now. We're going to look at that. I think that there's a significant amount of resistance there if we do get onto a bit of a rally with the again with uncertainty in South America and the need to plant more acres here. There is an enormous amount in the past 30 days. There's an enormous amount of risk premium built into the market. Risk premium works two ways. It can work as a bearish factor. It can work as a bullish factor. Obviously, the past month, it's been a bearish factor. The scale of new crop corn is a lot different. It's a lot smaller scale. And the scale of the chart, the scaling, first of all, this chart really doesn't establish itself until about the early December. It was long after new crop of 24. Put our lows in at 428. Didn't make nearly as dramatic a high at 479 and three quarter. Again on the same day, the 19th of February, we saw only a 38-cent pullback in new crop corn. Set our low at 41 and a half on the 4th of March. And as of yesterday evening, we're trading up about 13 cents from that at around 455. The next test for that, I really do believe we stand a chance to charge off and hit a number around 470. We'll see how that plans out, but that's really my number with that. Again, I'm going to provide these at the end of the session. For those of you that are tuning into YouTube, you'll be able to see images of these. The CFTC report from last Friday. Let's get back to some fundamental analysis. Export inspections really looked pretty good. 54 million bushels of corn was packaged up, left the United States. Excuse me, that's a 10-year average. Current week, 65.3 million. That didn't quite top the trade estimate. Trade estimate 39.4 to 76.8, squarely on the high end of the trade range. That pressed us to right at we're standing as far as export inspections on the year. We're about 9% ahead of pace to hit the USDA number for exports. Soybeans, still not a bad number, right about in the middle of the trade range, 23.8, estimate of 11 to 34.9. Soybeans aren't doing quite as well, around 2% ahead of pace. The soybean market, by and large, since China is our #1 soybean customer globally, they've pretty well bought and taken what there is to be purchased and taken. They don't really have too much paper on the books right now from the United States. The export sales report, and I'm going to reel back another day, that number still doesn't look too bad. 38.1, that was right in the middle of the trade range for corn. Soybeans exceeded the average trade rest, 27.6. I really believe that we're going to continue to see some of our minor players continue on in the soybean complex, and we are squarely in Q3 of our. We have 24 weeks remaining, so that squarely puts us in the third quarter of our export season. That's pretty much the wind down, and the last quarter of the export season is a very, very quiet quarter of the export season. So we're getting towards the end of things there. We can see that coming along. Not a whole lot to be really too concerned about. I do want to talk a little bit about the CFTC and commitment of traders, as had been discussed many, many times in the past. The net corn long, as reported by our fund managers, topped out about the same time we've seen our market hit these highs towards the end of February. Right now, the last numbers published, around 360,000 contracts net long among the money managers. As of last night, that number is 102,000. So there's been a very, very dramatic sell-off in those long positions. That's really what pushed this thing down. Are we going to see a turnaround? We're going to see somewhat of a turnaround. I don't believe that anybody's cocked and loaded to really take this thing to a negative position right now. The market just doesn't support it. What I would tell you is that what we're seeing going on in the December market, December itself is standing the net open interest of all participants right now around 360,000 contracts. That translates to 1.8 billion bushels of corn, new crop Ds. And again, I'm trying to put this in perspective for everyone as far as the size of the futures market versus the size of the cash market. If we do see this 95 million acres of corn, and I do think that number is quite realistic, we're going to see some pressure put on our trendline yields. We're not going to see a trendline yield like we've seen last year, but we could very, very realistically see a 16 billion plus bushel corn crop for 2025. What that really means is as things stand right now, about 10 or 11% of our new crop corn that we're going to be harvesting this fall, our actual cash physical corn, about 10% of that right now is being traded on the Merc. So again, by and large, most of the position is held by our producers. Not a lot else. I guess the one last thing I want to talk about as far as export sales, we haven't sold any new crop beans yet for the 2025 crop. This time of year, we should start seeing some interest in fall shipments of new crop soybeans. We're not seeing that yet. I'm not alarmed by that because this year also started out real slow. We were all wondering, when are we going to see our export beans? When are we going to see some sales show up? I believed then that it was going to come, and as things stand right now, we're ahead of pace. So I really believe the market is out there. I think the demand is there. I believe that we're priced fairly for that. So we'll see how these trade wars really pan out. That's obviously has congested our news. But with the news congestion that we've experienced right now, there's one thing that has been skipped. Again, I like to talk about the technicals. I like to talk about the fundamental analysis of the market. I've been watching something for about a past month or so, and that is our ocean temperatures and our ocean currents in the Pacific Ocean. That has a tremendous influence on South American and North American weather patterns as they're shaping up. We've had a very, very warm winter. We all know that. We've had an open winter. We're starting to see our soil temperatures climb southern Iowa. Wednesday, tomorrow, we do have a forecast of probably what's going to amount to one last blast of winter. Again, our soil is warm. This isn't the kind of snow that sticks around anyway or puts any frost in the ground. What is shaping up right now, and I talked to a group in western Iowa about this last week, is we've seen a very distinct El Nino shaping up in the Pacific. If this is the first place you've heard about it, good for you. Keep your ears open. Use your own media sources. We are shaping up with this weird, what I would call backpedaling. We're seeing a certain amount of trade wind activity actually blowing towards the east in the Pacific Ocean. That is backwards. So that might fizzle out, maybe not. The thing that I've been watching has been carrying on now for about a week. So that's something that we're going to stay tuned with. You may be hearing more of that in the future. It's really about all I have. Again, I'm going to put some images out for you to take a look at. And with that, again, Nexus here at Nexus, we appreciate your business. We appreciate you. I'll remind you again that not only do we offer grain services, we offer agronomic services, petroleum services, lumber and feed. So thank you very much for your business, and we'll be talking to you. Goodbye now.